Good evening, all. Ira Epstein of Linn Associates with your financial market wrap-up. And this wrap-up is for Monday, the 11th of January, 2021. Just getting on to 6 p.m. Central Time. Interesting day. Big break in the stock market. In fact, a lot of markets broke today. So what was it? Probably the first real profit-taking day that we've seen since December in a lot of the markets. Yeah, you've had small bumps in the road, but this was a little larger in size, and it makes sense. You know, at some point, people are going to grab some money. If you don't think so, then you don't understand futures. Futures are not an investment or a trading vehicle, in my opinion. Maybe you think otherwise, but if it were just an investment, why do they change from month to month the contracts? Why isn't there one continuous contract? There isn't. That would make it more of an investment vehicle to me. So you got to keep rolling from month to month, and there's different fundamentals that hit the market month to month and different seasonal factors. Always things to take your mind and test it. We saw a correction in the metal markets today as the dollar index rallied at the expense of a number of currencies that are still under some selling pressure. Bonds and notes gaining momentum. You were up to 1.139, I think, on the close in the 10-year yield. So here's a market that has gone from the question, was it going to hang around the 0.7, then 0.8, then 0.9? What would happen if it got over 1%? And you're seeing that story being answered. You're getting more energy numbers are going to start coming out tomorrow with the API numbers, and then we'll be getting the EIA the next day. So be ready for that. We're back to normal. That's the point I want to make. You're now adjusting to what happened in December and December and early January. And while we're only at the 11th, you're now entering another phase called profit taking. If you look at the S&P weekly area chart of closes, you're down 0.58. So let's go back here. Here is the highest close we've got ever. Big word, right? On a closing basis, and that was 38.17.5, and this is the first little break off of that. If you call that a trend changer, I can't agree with you. When you take a look at a daily bar chart, the overall pattern has been up. So you're getting a setback in the market. It's not monstrous. It's a setback in the market. What's the pattern? You've had a pattern of a higher high and a lower low. That is not a trend. You've had the momentum up. You've gone for new highs. We're not blind. We see that. But an easier trend is when you've got higher lows, higher highs in place. You don't have that. This makes this a difficult trade, something I fully expected and is normal in the second part of December. People go away, different money comes into play, they dress the books at the end of the year, then they take off that window dressing once you're in January. There's a whole shenanigans that goes on. And if you've been around the game, as I have for 5 decades, and you've owned a stock firm and you own commodity firm, you understand the game. And I have an understanding of what goes on at that time frame, and I pay attention to it. So to get this action, it's very normal. When you take a look at moving averages, there's nothing wrong here. The market's got upside bias. The 18-week average is over the 100. The 100's over the 200. That's still bullish. Where the resistance is, and you have to pay attention, are Bollinger Bands. You had been, and I'm going to back off here, you had 2 days in a row over the Bollinger Band through the close of business Friday. Today you began your correction, and tonight this is where you're at right now. Okay, markets only stay 5% of the time over a Bollinger Band, so that's a resistance point. The bigger picture is the market came out of this sideways action, and I'm going to take you right here. It had a slight bend to the upside, but the market kept pushing on the Bollinger Band. So it was trying to break out to it, and this was December 31st, and it finally succeeded. You had a big break. You came back up. When you come up that fast from that break, and if we take a look, this high right here is a 37.74.75. This high was 37.73 1/4. So you had an outside day down. You take out the high of that within 2 days, it normally leads to a bit higher price. But, Try staying more than a couple of days over a Bollinger Band, and that other rule comes in for a correctionary phase, and that's what you've got. But you have a market that completely denied the downside. I call it a bear trap, and the market went higher. Now, if the Bollinger Band had been way up here, I'd tell you that would be my objective. Because it ran right up to it, and all this occurred literally over that band, it's a difficult call. In all the years I've looked at it, I've never come to a solution for how to label it. When I look at momentum on the slow stochastic, how could I be anything but bullish? This is called embedded. Embedded means you convert an overbought condition and lock in a trend. That occurs when the red and the blue lines, they're called the K and the D, are going sideways over 80 for several days or more. Until the red line closes back under 80, I expect to see the pros buying this market. This morning when I put out my morning subscriber video, I was showing traders that. And I said that today was the day where the market had to decide, was it embedding? And in most cases it did. And I didn't expect a big break because of that. That's exactly what occurred. The NASDAQ's the weakest of the indices right now. It's not trying to embed, it's correcting. It has a lower low, higher high, and it's still caught in the Bollinger Bands that are fairly tight at this point. The Dow joins the S&P with an embedded reading. It's got the higher lows, higher highs. I look for the buyers in this market on the break. And in the Russell, it's one of the weaker. So why? Because it's not embedded yet. So you got two very strong markets, two on the weaker side. Again, they all have the pattern of higher high, lower low. Nothing I can do with those. In the VIX, you're just going sideways. A tip-off today was that the VIX never really popped very high. If this market on that break early in the morning when the Dow was down 300 plus or whatever, you had to pay attention. You weren't catching a real strong bid in the VIX. So that told me nobody's getting that nervous, and that's probably how it just all worked itself out. In the bond market, coming into today, right now, I'm not talking Monday's trade, now Tuesday, you have 4 days in a row under the lower Bollinger Band. The odds are strong the market's going to try to fight to get back to the right-hand side of that Bollinger Band. You're oversold on a big decline. You rarely go beyond 5 days. You can go a fifth. It's rare that you go beyond that. So I'd pay attention. What else? When a market does this and stays that much under it, it's not like a rubber band that's going to shoot up. It's like a rubber band that's old. It doesn't have a lot of pulling power. While the market's, in my opinion, is going to fight to get back here, you still have a top in place in this market. This market looks pretty bearish to me. 10-year notes, it's the same thing that I was saying on the other, and I think you've got a top of importance here in this market. Dollar index, you went from the Bollinger Band bottom to the Bollinger Band high. First time you hit the low Bollinger Band, I think the pros are coming out. Get to the upper band, if they're long, that's where I think they're coming out of that. In the eurocurrency, you went from the upper band to the lower band. Interesting as can be. I'm so glad I'm back now because these will offer setups for me. In the British pound, the chart action is bearish. You've got lower highs, lower lows. You settled under the 18-day moving average of closes. To me, the pros are going to look at that 135.42 as a resistance point. You break this pattern if you get over 136.42, and support is close in at 134.05. First challenge at a Bollinger Band. That's where I'd bet the pros will give it a hard look, if not take money off the table. Bitcoin, so you went from 42,730 to 31,105 in 48 hours of trading. 2 days. If you think that the brokerage firms don't look at this and they're going to keep their margins skyrocket high, you are so wrong. As I said, I think the exchange should redo this contract. They could either add more Bitcoins to it and change the valuation in some manner. They can get a smaller size mini contract, but you're really going to take the liquidity, in my opinion, away. I know the exchange will tell you, oh, we're doing volume and so on. All they want is a vehicle. How is a brokerage firm going to let the average guy trade this market? They're going to want $50,000, $60,000 margins to carry positions, and they're going to want to know that you have the money to withstand big losses. Otherwise, I'm of the opinion you don't let a retail account really trade in this market. That's just me. In Brent versus WTI, look at how the run-up occurred, and now you're finally getting a break. So you got up into the 370 level. You're pulling back to the 340. It's a one-day affair. You've been running like mad since the 180 level. There'll be a number here where the market's going to look rich. I don't know if this is yet it, but that differential will come in. As long as you have embedded readings in the March crude, which you have, I don't look for much in the way of breaks. You had a nice pattern of 4 sessions over. Let's see, what did we do today? We were over today so that's 1, 2, 3, 4, 5 sessions in a row where you closed over the upper Bollinger Band. You know what I'm going to tell you, what I expect today. I think the market's going to try to stay under it. Remember what I just said in the bonds. I haven't changed my opinion. A chart's a chart. I don't care which one it is. This is also a sign of how strong the market is. It is not a sign that the market's overdone. Markets that do that do it for a reason. They lock in like that because they're telling you how strong they are, not how weak. Markets that just hit the band and turn away, that's a whole different vehicle and move than when you lock in like that. Learn to pay attention to those. What about the Brent? Oh, I'm sorry, this is the WTI. The other was the Brent. 1, 2. Did we close here over it? 3, 4, 5. I'm going to look for the market under it now. We'll see if that happens tomorrow. Obviously, you got to go through the API numbers in the morning, so we'll see what that all means. In the heating oil, different pattern. Lower low, higher high. Remember when we were back here in November and I was telling you, watch out, you don't want to be short this market. And then I was saying the same thing about nat gas. On that huge break that we had, I said, you know, folks, you're going to get cold. Well, guess what? You're getting cold. And guess what the market's doing? This is the norm. But it's not a sign of super strength. Markets like this that lay down and they finally get their bounce, every time it gets a warm spell in the winter, it's going to fall easier than it rallies. That's how I'm viewing what this is doing. But at least the market's now fighting a major battle at that 18-day moving average of closes. A difficult vehicle to trade right now, in my opinion, as well. I want to remind all of you, if you haven't seen my morning futures video, it's something you might want to consider. Think of it this way. At 5:40 in the morning, I bring you up to date with the news that's going on in Asia, Europe, and what reports are coming out in the country, in the U.S. From there, I review 40 charts with you, giving you ideas for swing trades and position trades. I am not a day trader. If the profit objective is hit with the entry point the same day, great. If the stop order's hit with the entry point, that's how it works. What can I tell you? I am not a day trader. Swing trade can be you get in today and you're in there for 2 weeks. You could be in there for 3 days. You can be in there for 2 days. It's where the objectives hit in the futures market. So that's the kind of trade I look at. On the weekends, I put out every Saturday, just for my subscribers, a video of only weekly charts with weekly entry, exit points for the longer term trades. That's based just on those. And if you're watching those, you're probably still smiling quite a bit. You get the noise during the daily charts, but remember, those 5 days during the week make up that bar on the chart. How do you find out about it? Go to our website, www.iraepstein.com. Under the word research, it's all there, and that's where you sign up for it as well. I'm Ira. You have a great day. I'll see you tomorrow.